Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, great to talk to you. Interesting moment we're in the markets for sure now.
Gold, is it starting to outperform Bitcoin?
Yeah, it is. And actually, you did a really interesting interview with John Kaiser last week. I highly recommend people go on YouTube or on HowStreet.com and find it, because he really did a good job pointing this out, and it's just becoming even more pronounced since he spoke, because over the weekend, Bitcoin fell more. As we're speaking today, it's around 44,000. Who knows where it'll be next week? It could be 48, or it could be 30 or 25. But what has happened with Bitcoin is that the chart of Bitcoin fell through support when it broke through 50,000. 50,000 had been support on it since March. And on a chart, it looks like a massive head and shoulders chart pattern. And now we're below that support, which means that the trend is now down, the rally is broken, and I have no idea, where it's going to truly bottom at, because there's no way to really value what a Bitcoin is worth. But this sort of selling pressure is now entering the entire cryptocurrency market. You can load up websites that track them, such as Coinbase now. On any given day, you might see some of the currencies up 5%, or you might see many of them down 20% on any given morning. So we're in a technical slaughter box. That's a situation now, and it's just going to have to play out till it's over with. But one thing that this is demonstrating is a point that me and you have mentioned in our conversations, and that is that Bitcoin is not really a safe haven. It does not go up when the stock market goes down. It does not go up when the dollar goes down either. The dollar's been falling over the past couple of weeks, and Bitcoin has been falling too. Bitcoin has never gone up when the dollar has been in a pronounced decline or downtrend as it is now. What Bitcoin has done is simply trade closely correlated with the NASDAQ 100, more closely correlated mathematically with the price movements of that than anything else. So when the NASDAQ has rallied, Bitcoin has tended to go up more, and then when the NASDAQ simply corrects, Bitcoin crashes. And I think really part of what is happening is that we're in a correction, slow motion in the NASDAQ. It's come off its recent high to basically it's floating around the March lows as we're speaking, but bouncing a little bit off them. But I wouldn't be shocked if it goes, breaks the low of last week before we speak again. And if it does, Bitcoin's just going to go down even more. But Kaiser, in that interview, mentioned something that I never really made a big deal about. And he was saying that these cryptocurrencies should be viewed as collectibles, and not as like sort of money. People don't really go out in the real world and use Bitcoin for money. No store where I live takes it. And it's not a good store of value because it's so volatile. So it's like a collectible, a virtual collectible. And now that we've seen this collectible art, and collectible playing cards and so forth, it simply, to me, seems like another thing like them. It's more obvious that that's what's going on. But as people investing in markets that have stocks and exchange traded funds, not on these crypto exchanges where neither of those exist, it could be significant because there is a huge segment of small traders, particularly in the United States, who have flocked into these cryptocurrencies. A year ago, or by the end of last year, there were approximately 1.5 million people with Robinhood accounts that also owned a cryptocurrency. As of a month ago, that number exploded to 8 million. So that's how many people just on Robinhood with small accounts in the United States have tried to chase or get involved in this Bitcoin rally, and now they're all pretty much trapped, if they bought at any point since February. And I think, some of these people, once they sell out of these cryptocurrencies, will look for what else is going up instead of down. And, as of recently, gold and silver are what have been doing very well, in comparison with Bitcoin. So they may start to finally gravitate into some of these mining stocks. But as of now, when I load up the Robinhood account, I haven't wanted to see this sort of information. On the top 100 most owned list, there yet remains to be one mining stock on the list at all, or one metals ETF at all on the list. So the masses aren't in, even though, the gold stocks are doing very well, over the past 60 days. The GDX is right below 40 when it was at 31 on its low of March. So that's a nice, move in a short amount of time. We're speaking of a over 25% move when Bitcoin has fallen from 60,000 to now 43,000. Eventually more people will notice this and want to, make some changes in their account, get out of the cryptos, get into, things that are, have a more use in the real world, I should say.
Yeah, and I always think there was that event back in the 1800s that fried all the telegraph lines. It was a massive solar flare, and I always forget the name of the guy it was named after. But in modern times, we're still vulnerable to the same thing, and you never know if the Chinese might pull off some giant electromagnetic event that wipes out our computers. And if you have digital stores of whatever, I guess your cash, but you have records of that before it happened. But without real assets, your digital collectibles, everything could just blink out of existence.
Yeah, for sure. I mean, I have no interest in having any of my wealth tied up in digital things like that. But perhaps there's a younger generation that, they're used to buying things on their phone and thinking they own it. For example, Amazon sells, you can rent a video on Amazon and watch it in a 48-hour time period, but you can also pay extra money and they'll let you so-called own it. So you can watch it anytime you want, but you don't really own it. You just have the ability to keep watching it through them. You don't physically own anything. And maybe that sort of trend started, with music 15 years ago, where people were buying music on digital, downloading the music on iPods instead of buying CDs and DVDs that they could have in their hands and truly own. I don't consider myself owning digital music or digital movies, because these things that Amazon or whatever these services are, Netflix, whoever you're buying it from, what if they just go out of business? Then your ownership is proves to be worth nothing. And the cryptos are the same way because, you're owning these things through all these various exchanges. And many of these exchanges, they're not really truly regulated. Some of them have turned into scams, or they just crash and disappear. So that's a really big problem with the entire crypto market. The lack of regulations make it very risky. If you buy a CD, they're called certificates of deposit. At least, the bank has a record of it. There's a paper record somewhere of your ownership that's sitting somewhere in the real physical world. The digital world is not the real world, and people should not confuse the two as being the same.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, a survey found if the U.S. and the rest of the world decides to go to a carbon-neutral green economy, mineral demand will increase 500% to put in all those wind turbines, tidal power generators, solar panels, and so on to help generate the power to replace oil and gas. Any attention being paid to that?
Not really, but I think it demonstrates, I've heard people mention it, don't get me wrong, but it's not national news. It's not something I think most people really realize. But what it does is it demonstrates how unlikely or the impossibility of truly getting out of fossil fuels is, and how it's sort of contradictory because the transition process of getting out of it requires constructing things, requires using energy itself, getting more minerals that, it takes more energy, so to speak, to, mine minerals out of the ground that's needed to build solar panels and whatnot than it does to just pump oil. So it's sort of a little silly. It's sort of a fad, I think, just as the idea that crypto is going to replace real money is a fantasy. So are these ideas. So that's the way I view it. And I personally invest in my oil stocks. I have a portion of my account in stocks such as Exxon, because I don't think oil is going to stop being used at all. I think these are just fantasies, and I like to get the dividends. And as we speak, the price of oil is up. It's right under $70 a barrel, and it was, briefly, briefly went negative last spring in the futures market, but the price has gone up 100% in the past 12 months. So if oil was going to go away, the prices would be going down and not up. And I think another point to be made out of this is one of the biggest myths that's been promulgated, and still is in some circles, is that we're in some sort of deflationary environment. Well, that's not true. You see the CPI numbers recently since we last spoke. They went up 4.6% annualized CPI in the United States, way above what was estimated to happen. And on a monthly basis, saw a 0.8% increase. So it wasn't simply the 12 months comparison at work. Commodity prices are going up. Now the Federal Reserve says this is transitory. there's people I believe that are even more mistaken than them in some of the alternative financial media who think we're in a secular deflation. Well, they're denying what's happening in front of us, and that's the rising prices, and that's the trend. And I think successful investing and trading means following the trend, not denying that these trends are happening. Look for trend changes so you can adapt to them, but you can't really deny them. To assert there's deflation when prices are going up really makes no sense. Bitcoin's in a downtrend. It's below its 200-day moving average now. And commodities are above that. And that's just what's happening. And I think the key to trading and investing is focusing on what's happening, what's working, and sticking with that. And I think over the past 12 months, the number one trend change that has happened is this move in commodities. We saw a secular low last spring when the oil prices briefly went negative for the only time in history, and now we're going up. I say this is the most important move because I believe the most important move in any given year is a secular turning point. When you've seen a bull market that's been going on for years, then enter a bear market, that's a big move, an important move. Or the opposite, a long-term bear market begin a bull market. And that's what happened to commodities last year. The stock market, markets around the world took hits, when all the COVID crisis hit and the shutdowns began. The S&P fell over 33%, but it quickly rebounded. That was a move that took, got all our attention. No doubt, we all, who are investing or trading felt it as it happened. It was a very volatile situation. It was the news of the year, but if I look back, the most important move was really this secular low in commodities because it's not a gyration that came and went like that 30% plunge in various stock markets, but the start of a move that's carrying over into this year, and it's going to last for years to go. And this year, so far, year to date, among the top gaining things in the markets are energy stocks and material stocks, which you mentioned, that are going up as material prices are going up faster, making a sort of a mockery out of the Green New Deal and other such concepts of getting off oil.
Well, here's, people aren't being practical, but of course, we have the mayor of Vancouver who says oil and gas exploration should be banned immediately. And I like to counter, well, that's a nice polyester shirt you're wearing. Well, that's got oil in it. I guess you better get rid of that. You have rubber-soled shoes. You better get rid of that. Oh, polyester blend underwear. You better drop that as well. Your computer on your desk's got a plastic casing and minerals in it. That all took energy from fossil fuels. Get rid of that. Well, after a while, you have a naked man standing in a city with no buildings or roads. That's what happens when you take fossil fuels out of the equation. And I'm sure 100 years from now, people will say it was such a valuable resource. Did you really actually burn it back then? Because it's so useful making other things, and I'm sure it'll be diverted to making those things as well. So it's not an either or. You have to, because just cutting something off without a plan on how to replace it isn't a plan at all, is it?
Well, it sounds like he has a bit of a Luddite.
The city of Vancouver doesn't want people to use natural gas either.
Well, I mean, I can appreciate a Luddite mentality to a certain point. I mean, there are things that are new technologies that I think it would be nice if they were gotten rid of. I think it would be nice if Facebook was gotten rid of, or all these Alexa gizmos. If they could just get rid of these things. But you can't get rid of oil and natural gas and things that have been used for you really became necessities 150 years ago in Western civilization and the entire world, so to speak. I think if we got rid of Alexa, there'd be no, we would be able to live the next day and not really miss it, but you would miss all these other things. So I think it's sort of, he's appealing to people that vote for him is what I would say about it. But there's more and more of that going on where politicians are looking for these cultural issues or slogans or to get votes and not really doing their job of trying to grow economies or, manage things better. They're just getting votes this way.
Yeah, it's easy to be anti-something, but how about being practical? I haven't seen a political party yet that has a slogan that says, we're practical.
Yeah, I'd like that.
Yeah, I think that's what the average person wants. I don't care about left or right. I want, my government to be affordable. I want my home to be affordable. And nobody seems to work on that. It's always, I don't know, you're complaining about Mr. Potato Head, or you want everybody to have a windmill on top of their house. Well, what is it? Like, what's going to work out best for me? What's going to work out for Mr. and Mrs. Joe Average? I think, they're just not there. Nobody's looking after that particular interest. And if they do, then they'll go and do something weird or wacky that, oh, geez, I thought you were on the right track, and now you're proving that, once again, something, your attention is somewhere else when there's some crisis that needs to be looked after.
Yeah, I agree with 100%. And again, this is, what I say, they need to destroy Facebook. I mean, I don't know if I really want them to, but Facebook, I don't like it. One of the main reasons why I don't like it is because I think it helps create this type of politics where the politicians are interacting with people with memes instead of practical policies, I guess is the way to put it. They're just, the internet and being a social media star to get votes is making them or encouraging them to behave in counterproductive ways, whether that's, Donald Trump and his tweets or that Cortez girl or this mayor that you're talking about in Vancouver. They're not doing practical policies, they're doing internet memes, and that's why I don't like the Facebook thing.
Mike, is there something else that we should be paying attention to right now?
Well, as someone in the United States, we all obsess over the NASDAQ, the Dow, and the S&P 500. But interestingly enough, almost all foreign markets are now, year to date, outperforming the U.S. stock market. Almost all of them. The German market's doing it, the Russian market's doing it, many of the Asian markets are doing it, the Canadian market's doing it, and no one is really noticing this, but the reason why it's happening, or two reasons. One is the dollar is going down, and when the dollar goes down, because the U.S. market is priced in dollars, it hurts it. So it's helping all these other markets perform better. And the second reason is the NASDAQ just went up so much last year. And these big cap technology stocks and fad stocks and things such as all these fad Robinhood stocks and the ARK ETF that kind of specializes in that stuff. All these things kind of peaked out. This segment of the markets peaked out in February. And that's hurting American investments. It's not that this segment of the market isn't reflected in the Dow. For instance, the Dow made a new high this month, while this ARK ETF is almost 40%. It's 40% below its low of February, and so there's a big segment of the U.S. stock market, big cap tech stocks, fad stocks that are just doing awful. It's not reflected in the Dow, but this is what so many stocks that, people have been chasing are doing. And this is a big thing has no sign that it's over with yet. So these are two factors, I would leave people thinking about think about foreign markets and avoid these fad stocks that did so well last year and now not so much. Get out of them. Get into gold and silver and mining stocks.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson from wallstreetwindow.com. If you have any questions for Mike, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.